welcome to this explainer. Today, we're diving deep into the highly anticipated Molbio Diagnostics IPO. There's a lot of buzz out there, so we are going to look strictly at the hard data to separate the market hype from the fundamental reality of this business. If you've been following the healthcare space at all lately, you know this is an absolutely massive one. So let's jump right into it.
We've got 6 parts to cover today. 1. The IPO basics. 2. The razor and blade model. 3. Financial health and growth. 4. Key risks to consider. 5. Valuation and listing gains. And 6. The final verdict.
Section 1. The IPO basics.
Okay, so Molbio Diagnostics is hitting the market with a total issue size of 939.70 crore rupees. What's really fascinating here is that this is a Temasek-backed healthcare company that has actually achieved that highly coveted unicorn status, meaning, yes, a valuation of over $1 billion. And now they're bringing their proprietary point-of-care testing technology direct to retail investors like us. Now, here are the crucial numbers you absolutely need to know to evaluate your entry. The window is super tight. It opens on August 10th and closes just 2 days later on August 12th, 2026. The price band is set between 768 and 807 rupees per share. Since the lot size is 18 shares, that brings the minimum retail investment to exactly 14,526 rupees.
If you do decide to participate, be prepared for things to move incredibly fast. The allotment is finalized on August 13th, literally the very next day. Refunds and the credit of shares happen on the 14th, with the actual stock market listing slated for August 17th. Seriously, blink and you might miss the whole cycle.
Section 2. The razor and blade model.
Moving right into how they actually make their money, the entire core engine for this company revolves around their proprietary Truenat machine. Now, this isn't just some piece of hardware. It is a highly integrated, high-margin ecosystem, and importantly, it's heavily protected, backed by patents in over 100 countries. That creates a massive barrier to entry for any competitors trying to move in on their turf.
They brilliantly utilize what's known as the razor and blade model. Think about it like this. The Truenat machine itself is the razor. Once a clinic or a hospital buys one, they are locked into that ecosystem. Then come the blades, which in this case are the 40-plus disease assays for things like tuberculosis, COVID, and HIV. These test kits are consumables. They get used exactly once, meaning hospitals have to constantly reorder them, which generates this incredibly sticky, recurring revenue stream.
And this model isn't just playing out locally in India. Molbio has carved out a massive first-mover moat on a global scale. They've expanded operations into over 85 countries. That's an expansion heavily bolstered by official endorsements from the World Health Organization and the United Nations. I mean, let's be real. When the WHO officially vouches for your diagnostic tech, the global business-to-government doors just swing wide open.
Section 3. Financial health and growth.
So let's see how that recurring revenue actually translates to raw growth, right? When we look at the top-line trajectory, it is genuinely staggering. Revenue from operations jumped from roughly 1,020 crore rupees in FY25 to nearly 1,446 crores in FY26. We're not just looking at steady, incremental gains here. This is explosive scale.
That jump represents a massive 41.7% year-over-year revenue growth. For a company that actually deals with physical hardware manufacturing and strict medical compliance, achieving over 40% growth in a single year, that perfectly explains the incredibly high institutional interest we're seeing in this IPO.
But hey, revenue is just vanity if you aren't actually making a profit, right? Well, Molbio is maintaining an incredibly impressive EBITDA margin of 22.56%. That healthy margin flows right down to their bottom line, yielding a very solid profit after tax of 164.1 crore rupees in FY26.
To fuel this growth machine even further, they're raising 200 crores in a fresh issue. It's really important to see where this cash is going. They are earmarking about 125 crores primarily for R&D and infrastructure, and roughly 80 crores to expand their manufacturing plants in Goa and Visakhapatnam. Essentially, they are aggressively building capacity to meet that soaring global demand.
Section 4. Key risks to consider.
Okay, it is absolutely crucial that we take off the rose-colored glasses for a minute. Despite having over 40 different assays, Molbio has a surprisingly high dependency on tuberculosis testing. That sort of product concentration is a legitimate risk. Furthermore, they operate under incredibly strict oversight from regulatory bodies like the US FDA, CDSCO, and the WHO. And finally, because they sell so heavily to governments, their cash flow is entirely vulnerable to tender delays and regular bureaucratic red tape.
Also, you really must note the massive offer for sale allocation here. Out of the 939.70 crore total issue, 739.70 crores is in OFS. What that means is the vast majority of this IPO money isn't actually going into the company's war chest to fund future growth. It's going straight into the pockets of exiting shareholders and early investors who are just cashing out.
Section 5. Valuation and listing gains. We definitely have to address the gray market premium, or GMP. But please remember, as we look at this data, that GMP is highly volatile, it is completely unofficial, and my analysis here is absolutely not a recommendation to buy or sell. It simply gives us a pulse on where market sentiment is currently sitting ahead of the listing. So, based on current unofficial GMP data of 220 rupees over the upper price band of 807, the estimated listing price sits right around 1,027 rupees. That means short-term traders are eyeing a potential 27.26% listing gain on day one. For retail investors, that translates to a potential expected profit of nearly 4,000 rupees per lot.
From a purely fundamental standpoint, though, how does the actual pricing look? Molbio is pricing its issue at a post-IPO price-to-earnings ratio of about 56.67. When you compare that directly to industry peers like Dr. Lal Pathlabs or Metropolis, which generally trade in the 62 to 63x PE range, Molbio actually appears to be leaving a little bit of money on the table for incoming investors.
Section 6. The final verdict. So, what does all this data actually mean for you? Well, the source material paints a highly compelling dual picture here. On one hand, it's a very attractive setup for the short-term trader. The unicorn hype and that strong GMP clearly point to healthy listing gains. But on the other hand, it's structurally sound for long-term investors too, thanks primarily to those incredibly sticky razor and blade cash flows and their massive international expansion.
As we wrap up this explainer, I want to leave you with a final thought to ponder. You've seen the 41.7% growth, the world-class margins, and those powerful WHO endorsements. But you've also seen the heavy reliance on TB testing in that absolutely massive offer for sale from insiders. So, do the overwhelming strengths of their recurring revenue model justify those risks? That is the ultimate question you need to answer for yourself before this window closes. Thanks so much for joining me on this deep dive, and keep learning.